Hey everybody, Spartan here from SpartanTrading.com. Today I wanted to show you guys a tool that you can use to track and record what your actual risk reward is in a certain situation. It will help you visualize it, see where exactly your profit targets need to be, and it works and it's very fast to basically apply to any single situation, either to the long side or the short side. Risk reward, in my opinion, is the key to profitability in trading. And if you're not using stops, or you don't know how to or where to exit a position when you are wrong, the probability of you being profitable in trading is slim to none. Mathematically, you can't really be in the long run. So I wanted to show you guys a tool that you can use, and it should be available to every single person on all their platforms. Fairly easy to set up and pretty quick to set up in live situations. Now, the tool is a Fibonacci tool. And what we want to do is we want to alter this Fibonacci tool to give us some form of risk reward parameters. Now, let's say that I'm a trader and I'm day trading in this instance, and I wanted to get into this stock. I wanted to get into this stock at this point on this little flag break. So I see that the stock's testing the downtrend, and I want to take it long on the downtrend break because I think that it can push to the upside. So I want to take it long on that downtrend break, and I want to set up my risk reward tool. I'll take the Fibonacci retracement tool. I'll set it at the entry point where it would be 62.66 in this instance. I'll pull the tool down, and when you pull it down, this is for the long side, and you'll place the tool where you think your stop should be, or where you would want to exit the trade if it went wrong. In this case, if this stock broke this range to the downside, then obviously you would have more room to the downside. So it's not something you would want to hold if it did break that range. You want to give it a little bit of room below that range so that it can test it, doesn't have to, you don't want to put your stop right at it. It will stop you right out. So you'll set your stop there, or you'll set the risk reward tool there where your stop would be. You'll double click the Fibonacci tool, and you'll take off all the percentages, and you're only going to leave up 3. The 3 you're going to leave up are the 100%, which is where your entry would be, the 0%, which is where you place your stop. Other than that, you're going to leave one last one up, which you're going to change to 400%. So if you had a 3-to-1 risk reward ratio, you would add 300% on top of that 100%, and you would get the 400%. Let's say you had a 5-to-1 risk reward ratio, you're risking $1 to make $5 for whatever instance. You would change this to 600%, so 100 plus 500%. In this case, we want a 3-to-1, so we're going to change it to 400%. We'll hit apply, and this is going to give us the risk reward. So if I'm willing to risk this amount of money, 62.66 to 61.878, this is where you get stopped out at that level. I want to make 3 times that amount, and this visually will show you where that amount would be. So the profit target in this area would be 65.29. Doesn't mean you're going to get that profit target. You just know exactly where that level would be and what you would need to see in order for this trade to make sense. Now you can look at this trade and go, well, there is actually some resistance. These highs could be seen as resistance before that profit target. 64.66 and the 64.90 level. Now looking at this, if you had a strict risk reward criteria where you only take 3-to-1 setups, this would not make sense. This just allows you to visually see it fairly quick. You could do this again on the short side to the long side. It doesn't matter. I'll flip it. Let's say we're taking it short at last day's high, which is that green line. I'm setting my stop just above the high of the day, which ended up being 70.29. We'll set it at 70.50. In order to meet your criteria on the downside, you would need to see room to 65.81. Now this candle that pushed up was extended, started to pull back all the way to the open. Would it make sense in this case to take the trade? Yeah, probably, because you would see that, that's just a retracement of this extension candle towards that level. It actually has room, lower back into, I would say, this uptrend area from the pre-market would want to be retested, and it was. But this would be a way of just quickly checking out whether or not it meets your criteria. You can do this quickly on the fly. It's a great tool to set up. If you're having issues, especially setting your risk reward, this can be done on the fly, etc. Anyways, that's it for today, guys. Just want to give you a quick little tool. If you have any questions, you can email me at spartan@spartantrading.com, or you can reach out on Twitter, Spartan Trading, at Spartan Trading. Happy to help, guys. Have a good day. Thanks for watching.